In this video, you're going to learn 10 smart money strategies that you can use to make money in stocks. Hi, I'm work for SamerAI, and if you're looking for ways to make money in the stock market, then you're in the right place. In this video, I'm going to show you 10 of the best strategies that I've used over the years to make a fortune in stocks. So without further ado, let's jump right in. 1. Make an investment plan. Always start with a plan and stick to it. Identify what stocks you want to buy and how long you would like to hold them for. Investing in stocks can be a daunting process with so many options on the table and risks that come along with it. If done right, stocks can benefit you with great returns and help you build wealth over time. To set yourself up for success, creating a plan of action is essential. Put aside an amount of money to get started and use research and resources to find stocks with potential. Take into consideration market trends, industry, company size, risk levels, and any other factors before making the plunge of putting your money into stocks. When your stocks start paying off, don't forget to sit back and enjoy the fruits of your labor. 2. Diversify your portfolio. Investing in stocks allows investors to diversify their portfolios and take advantage of different stocks across different markets and sectors. With stocks, diversification is always a winning strategy. When you diversify your portfolio with stocks, making sure to pick stocks from different companies, industries, and countries, you're hedging your bets against the riskiest of investments. The thinking behind it is pretty simple. If one stock takes a dip, hopefully the other stocks will be doing well. That way, you can swim straight against the market tide and say goodbye to those perilous plunges. So don't be afraid to venture into stocks. Diversify and look for stocks that are seemingly safe and smart investments at the same time. You'd be doing yourself a whole lot of favors. 3. Practice dollar cost averaging. This strategy involves investing the same dollar amount into stocks on a regular basis, over time, regardless of stock price at that particular moment. This helps protect investors from sudden market swings and can also give better returns than investing all your money at once due to compounding interest benefits. 4. Research before buying stocks. Before investing in stocks, do your research and look for stocks with a history of steady returns. Yes, that same tedious task you have to go through with every decision. Before swiping left or right on stocks, make sure to do your due diligence and not just take a leap of faith. Put in some time and effort, because in the world of stocks, no amount of luck will get you far. As they say, knowledge is power, especially when it comes to stocks. 5. Use stop-loss orders to manage risk. Investing in stocks has always been one of the most thrilling and lucrative ways to diversify an investment portfolio. But stocks can be a bit like roller coasters, filled with high thrills and highs as well as dips and drops that can cause even the most seasoned investor's stomach to churn. The best way to manage your risk when investing in stocks is to incorporate stop-loss orders into your strategy. It's an automated safeguard against hefty losses resulting from sudden peaks or troughs in stock prices that ensures you don't get stuck with a complete free fall on your hands. Stop-loss orders will alert you when stocks dip below a certain price, so you can make informed decisions about whether you want to stay aboard the ride or bail out. Smart investing? You betcha! 6. Utilize analytical tools. If you're someone who shies away from stocks because the idea of making money from them seems complex, then boy, do we have news for you. With the plethora of analytical tools readily available for stocks, making an informed decision about your stocks doesn't need to feel daunting anymore. No longer does trading stocks have to leave you feeling paralyzed as you grapple with economic terms that don't make sense. It's easy to understand how stocks work and how to get started. Just use analytics. Discovering stocks doesn't need to be a constantly changing game, because there are plenty of simple tools out there that can help even the most novice investor become successful. Make use of available analytical tools such as earnings per share, EPS, and price-earnings ratio, PE, to better gauge the performance of stocks you are interested in buying or selling. 7. Avoid getting greedy. When it comes to stocks, greed is not good. Some people get carried away when stocks take a rapid rise, wanting to strike it rich in the market and ride the wave until the very top. Unfortunately, this often proves to be an ill-advised strategy, as stocks usually come with considerable amounts of risk, and many times these unexpected drops can be almost as steep as the highs they previously achieved. That's why taking caution and avoiding greed go hand in hand when investing in stocks. Greed can undoubtedly lead to big wins, but more often than not, it leads to big losses too. There's no getting around that fact. If a stock has gone up significantly, resist the temptation to hold onto it for too long. Take your profits when the stocks are at their peak and then reinvest that money into other stocks. 8. Pay attention to timing. Pay attention to market cycles and try to invest in stocks when they are undervalued or when there is a good buying opportunity. 9. Set realistic goals. Set realistic goals and don't expect immediate returns from stocks investments, as stock markets tend to be volatile over the short term but more stable over the long run. Setting realistic goals is essential to hitting success in stocks. Instead of expecting a sizable return in a month or two, be patient and plan for a less exciting, but more reliable long-term investment. That said, stocks do have potential to provide strong returns on investments if managed with care. Have realistic expectations and give stocks some time. You may surprise yourself and come out on top in the end. 10. Understand tax implications. Understand how stocks trading affects your taxes so you can take full advantage of any tax breaks available and minimize your overall tax bill on stocks investments. Write a YouTube video conclusion about the above and CTA to subscribe to my channel. Hey everyone! So as you can see, stocks investments carry a wide range of potential rewards and risks. But if you arm yourself with the right knowledge, strategies and tools, stocks can be a great way to diversify your investments and potentially earn some nice returns. For more tips and strategies on stocks investing, be sure to subscribe to my channel. I'll be sharing more money-making tips and hacks that you don't want to miss out on. Thanks so much for watching, and until next time, happy trading. Thanks for watching. Click the subscribe button and join us on our journey to become the first AI YouTube channel to reach 1 million subscribers. See you soon.